Hi everyone, Kyle Higginson here with CDP Stocks. Today we're going to go over earnings with options trading. So let's get right into it. So what's the earnings? It's earnings every 3 months. The company has to produce the results that's publicly traded. So where do we find these companies and where do we evaluate them So first thing, you can Google NASDAQ earnings calendar, and then it'll pop up right here. You can go right into it, and it'll show every single company on the U.S. stock market. So today's July 24th. So what I like to do, I go through every one of these hand by hand to pick out the companies that I like, and this is sort of what I do. I'll move everything over and bring this up, and then what I like to scan on is Marketsmith, and it gives you really everything you need to know about a stock. It's expensive, but for the beginners out there, you can get a free trial with the Marketsmith. And then you can get like a $15 a month kind of package, and then it does get up to $200. And I've been a member with Investors Business Daily with Marketsmith for about 10 years now. So, and I've never missed a month with it. I can't live without Marketsmith. So, getting into it. So what I would do is just right up here type in. So the first one, ADOM. I like to go off. See, it's just a kind of a penny stock. I'll get into another one. Here, we have this one. It has options up here, minus 40% short interest. And I like to use these, I'm going to make it bigger here. You can do these checklists. So as you can see here, we're in a flat base pattern. The pivot point's not actually till here. However, you can it has cut your loss and take your profits up here. You can tell the earnings in the last few quarters have been very profitable and growing at a rapid rate, even though the growth rate is saying minus 16%. It must have been from the 2017. And the sales have been fairly consistent. Debt is manageable, like it's very low, 3%. You can change, actually, whoever you really do like, and see it, Benjamin Graham, it looks pretty good. Everyone's kind of, it's nearly meeting here. It's got the last few quarters, it doesn't meet the liabilities. And then, so what I would do, let's go over here. So we're looking at 1744 options, show more, and I usually go about a month expiry date for the earnings. At least the closer you are to the date, the less probability of the stock going up will actually, if it does hit your strike price, will give you a much better return, because you got to think, like, the least likelihood of something happening is going to give you the biggest payout. So if you do like further away, I'm sure you can go further away in this option than what it's showing in here. But yeah, so the further you're out of the strike price, if it does hit it the next day, then you are going to get a bigger payout in the money. So 17. So we can actually do like an 18 just outside of the money. Call if you're bullish on it, or do the puts. And what I really like about the options in earnings is you can really limit exactly what you're willing to risk. Like last year, I wasn't doing options in the earnings. I was just putting in lump sums of money. I'd have to put at least 10 to, I think the most I got up to was about 50K into a trade for earnings. And once you put in that much, and then sometimes I was like leveraging it out. So if you, like I got hit hard sometimes, and it would nearly wipe out your entire position if you were using leverage. With the options, you can gain the exact same amount of control with a very small portion of money and nearly putting in your risk. So say if you had $10,000, you can put in, if you only want to lose, if you're only willing to lose 500 and you wanted to get a $10,000 position, I bet you $500 could nearly get you a $10,000 position in some options. So if we look here, $18 strike price in this, we're sitting at about pretty much 5 to 4 cents per contract for calls. It's fairly attractive. Like 5 cents per 100. You got to remember, this is 100 lots of 100 shares per contract. So you're paying 4 cents per 100. So it's going to cost you $40 to get into this for 100 shares. So $40. Every $40 you spend will get you, guessing $1,700 worth of shares, because you're timesing the 100 times 1,700 in kind of like the leverage. So anyways, that's how you do it, and the further out, the cheaper it should get. This looks like it's getting more expensive for some reason, but let me go in here. So we were on the 24th when we went over here, the 24th. So I went through it. I like to personally buy companies at the low that I feel that are doing okay. And in here, I'll make this bigger. You can actually get you can make a whole bunch of, like, this is my list, going back a little bit. But anyways, so this is for July earnings. These are all actually the companies that I got out, and I put it in a very neatly organized for each day, so I know exactly what date they are doing the earnings. So if I go here, so now all I got to do is 24th. So here I went through this hand by hand. So some of these I've already possibly went. Like this one, I did this whole list about 2 weeks ago. It ran up prior, so it would not have got the big jump. Sometimes I do, but so over the next couple days, hold on, I gotta go back here. Start with this one. You could see it it jumped up over the last week. On the 24th, another one jumped up. This one, it did run up a little bit prior, but it kind of stayed flat on the earnings. It didn't really do much. Here, another one, 17% over the, this is weekly, by the way, weekly chart. So it did pop. It actually, I don't believe it popped today. It ran up. Yeah. It did 2%, but it mainly ran up the last few days. I personally like to buy Tupperware. This one, I bought it. I bought the $20 calls. I definitely got tanked, but luckily being in options, I only put up a small portion, should probably put about 5% or so of your account in each trade. And you can still make sizable amount of money and returns when you're right. So like you could be like 3, 4 in a row, but if you hit a 20%er and overnight on an earnings or 10, sometimes you can go up 400 to 700%. So it only takes sometimes about 1 out of 5 to just get your money back. And yes, so you're trading, like picking your stocks. Sometimes you don't have to be 100% accurate. So this one tanked. So what I went into for tonight, I bought some precision drilling. Let's go over this one, and then we can call her quits. Maybe I'll go over a few for the next couple days. I like this because had a big sell-off here, showed support right around this level as it jumped up, and then had a big sell-off. You could see the earnings has been coming back. They started getting into profits after some horrible few years, which you can see right down in here how it just started to sell off as the company was doing poorly. And now you can see the sales, though, throughout it have been fairly consistent and fairly good. Their debt is a little bit higher than I would want. Their short interest is down 3% over the last 5 days. I'd rather see in the last like day and a half, 2 days kind of thing up in here, not the last 5.5. Go over here, the options. I bought the 23 expiry date, $2. It doesn't really give you a whole bunch other info on this one, but yeah, so I paid 5 cents per option. I can't remember how many I purchased. And we go over here, it doesn't really meet too much of Buffett's criteria. I really liked it just for the chart here. I'm fairly bullish on oil right now, so yeah, we'll see how this one goes. Tomorrow, when it opens up, I will show you how the payout is on the options. This one was another good one that I did like. You can see the great sales increases. It is down the short interest the last 8 days. Still, it's a little bit farther away than I like. Down 24%. Earnings tomorrow. It hasn't really had a run up. Did have some nice volume in there. It didn't meet much of Buffett's. I like to go off of Buffett's. But yeah, we'll see how these ones plays out. Hopefully some of that was got you some value. Buying options into earnings is a much better way to manage your account than buying the stock into the earnings, because if this thing just happened to drop 20-30% and you put up $10,000, now you're going to be losing like $2,000 to $3,000. You're going to be taking a whack of your portfolio. With options, you're really getting kind of like insurance. Like if you're only willing to risk and only wanted to lose, say, 500 on a trade, you can just put in your full 500 and that's all you can lose. So hopefully that brings you some value to the new investors. Anyways, if you like this video, I will be doing a lot more. You can follow me on my Facebook page with CDP Stocks. Thanks again. Let me know if you want to know anything else with the stocks. Just shoot me a message, a question, and I'll answer. Thank you.